Okay, today's Couple Bowl, we've got a few questions. What is the biggest mistake we see people making when they give to charity?
Most people give cash and most people take the standard deduction. So why is that important? If you give to charity, that's an itemized tax deduction. If you take the standard deduction, which most people do, and you're giving cash, you get no tax benefit for the charitable contributions that you're making.
So what is good about giving appreciated stock versus cash?
So when you give appreciated stock, you get two tax benefits. So as with any charitable contribution, you get an itemized tax deduction. On top of that, you also get to avoid paying capital gains taxes on the growth of the investment. So you get a tax win on an itemized tax deduction front and capital gains front.
So in that example, if you give $10,000 of Apple stock versus $10,000 of cash, what determines how much benefit that is to you?
Yeah, so let's say you bought that $10,000 of Apple stock for $1,000. If you were to sell that Apple stock and then give the $10,000, you're going to have a $9,000 capital gain. So you're going to
$2,000 some dollars of tax.
Exactly. And so if you give the appreciated stock instead, you get the itemized tax deduction for the $10,000 charitable gift. The charity gets the $10,000 of Apple stock. They can turn around and they can sell it and it's tax-free for them. And you avoided paying the $9,000 in capital gains taxes on the growth. If you really want to own Apple, you can then turn around and you can buy that $10,000 worth of Apple, and now your cost basis is locked in at the present value as opposed to that $1,000 that you originally purchased it for.
So Michael, what is bunching and what's a donor advised fund?
So if we talk about the fact that most people take the standard deduction and a charitable contribution is an itemized deduction, most people are giving, but they're not giving enough to get a tax benefit from the gift. So a way to get above the standard deduction threshold is to bring forward multiple years of charitable giving into 1 year. So if we go back to the example of giving $10,000 of Apple stock to a charity, well, if you're not exceeding the standard deduction threshold, maybe you say, I'm going to bring forward 3 years worth of that gift and I'm going to give $30,000 this year, getting above the standard deduction threshold, as opposed to just giving $10,000 each of the next 3 years and falling below that standard deduction threshold. So what that does is it allows you to get a bigger multi-year tax benefit by bringing those gifts forward as opposed to doing them independently.
So taking that idea forward, the $30,000 of Apple stock that you potentially bought for much less, if you don't want to give $30,000 to any individual charity, what's a good option?
So one strategy that you can use is utilizing what's called a donor advised fund. So with a donor advised fund, you can take that $30,000 of Apple stock, you can grant it into the donor advised fund, which in itself is a charitable organization. So you get the itemized tax deduction for the $30,000 gift this year. Within the donor advised fund, you can then sell the Apple stock and have it diversified amongst a portfolio of investments. And then over the next 3 years or however long you'd like to, you can then make grants out to the end charity as you see fit.
So can you name the donor advised fund anything you want?
Absolutely. So you have the Fontana Family Foundation. I have the Michael Dunham and Haley Dunham Family Foundation. You can name it anything you want. And it's one of the great benefits of a donor advised fund.
Okay. So from a bookkeeping point of view, as a participant in one of these, one of the big benefits is it simplifies keeping track of giving. So I can put stock into the donor advised fund and it'll keep track of what's there, and it's invested so it can continue to grow, and I can make grants from the fund as I please. So that example, put stock in there, let it grow, at any point make grants to charities.
Yeah, and with that too, we have a number of clients who maybe give to a number of charities, right? Maybe they give to 10, 15, 20 different charities. One of the big headaches come tax time is you need to track down a gift letter from each of those charities to prove that you made the charitable contribution. One of the nice things about a donor advised fund is because that is when the taxable charitable gift occurs, you don't need to track down all of those giving letters. You just get one gift letter from your donor advised fund, and that's all you have to give to your CPA come tax time.